let's dive further with our first guest. We've got David Lawant. He's the Director of Research at Bitwise Asset Management. Welcome, David, to the show. So perhaps you could walk us through how you believe we got to this death spiral we're seeing with the Terra Luna ecosystem right now.
Yes. Hello, everyone. It's great to be here. So I think that, as you all said very well, I think the most important thing to understand at this moment is that Terra and UST, they have this very specific stabilization mechanism that is different from other stablecoins that we see and that have been working in the market for a much longer time, and things like USDC or Tether or even DAI. I think that the overall dynamic here at play is that the whole Terra ecosystem is kind of this game of confidence in that it is an algorithmic stablecoin that has been more recently partially backed by Bitcoin and other crypto asset reserves, but essentially it relies on the issuance of Luna, and it depends on the price of Luna, and it is a type of asset that is exposed to quote unquote bank runs. And I think that's what we have been seeing since the weekend, and it has been accelerating overnight. Well,
it's interesting that you say that this is a confidence game, because it implies that there is a con artist involved. And we do have Do Kwon, who is the CEO of Terraform Labs, who is behind Terra Luna. He has come up with a plan. He says, before anything else, the only path forward will be to absorb the stablecoin supply that wants to exit before UST can start to repeg. There is no way around it. We propose several remedial measures to aid the peg mechanism to absorb supply. Among those proposals is to increase the burn rate of UST. They also want to continue to explore various options to bring in more exogenous capital to the ecosystem, which is another way of saying, you know, their ecosystem needs continuous third-party capital to survive. And that raises all sorts of questions of how sustainable is that. And he also mentions that as we begin to rebuild UST, we will adjust its mechanism to be collateralized, which seems to me an admission that their algo stablecoin model didn't work, and that perhaps they're pivoting to become a more centralized stablecoin. So maybe I could ask you on the first system. Their model requires continuous third-party investment in order for it to survive. How sustainable is that?
Yeah, I think you put it very well. And I think that they're slowly realizing that it is relatively hard to sustain a stable algorithmic stablecoin in a market that is as volatile as crypto is, and especially under the current environment. I do believe that the idea right now, the plan has somewhat shifted a little bit to accelerate the absorption of all this Terra and Luna that wants out of the ecosystem. So yeah, I agree with you in that I'm not very sure how things are going to play out from here, but I do believe that the way forward for the Luna and Terra ecosystem is to move more into a system that is collateralized with assets that are independent of the Luna ecosystem, the exogenous capital that we just.
So it's no longer going to be an algorithmic stablecoin model. They're essentially going to pivot to become a centralized stablecoin of sorts.
Yeah, it's hard to know, right? The situation is very fluid, but what I think it's also important to have in mind is that we have seen not very different initiatives in the past that also didn't work very well. Some of you here might probably remember Basis, which was around a few years ago. So I do believe that this is a more sustainable path for their ecosystem.
You know, you're talking about sustainable path, and that implies that it does have a future. You know, we had Do Kwon on a few months ago, and one of the questions I asked was, okay, how are you different than Iron Finance? And you remember Iron and Titanium, they basically collapsed. And he said, well, the economics are different with Terra Luna / UST. It seems that they kind of ended up in the same place, and we don't hear about Iron anymore. You're talking about a route forward, but is it really going to be there? Lots of people lost billions of dollars in this in a matter of hours. Would anybody want to revive it or care anymore? Is there anything that would even do that, number one? And number two, doesn't this hurt the overall ecosystem of the cryptocurrency markets when people are like, you know what, I don't really trust any of this anymore. I've just watched people, the smart money, lose billions with a guy who had trusted a model that everyone said wasn't going to work, and sure enough didn't work. So what makes this any different?
Yeah, no, I agree 100% with you, Lawrence. And it's hard to know. All I'm saying is that I think this is the least worst measure that they can take at this point. But I agree with you in that the confidence around the Luna ecosystem will probably be different from here going forward, and perhaps even towards the whole algorithmic seigniorage-based type of stablecoins. What I think is important to understand from a broader market perspective, it's basically two things. The first one, as I alluded to in the beginning, the Luna and UST type of structure is very different from a lot of the other more established stablecoins that we see in the market that are properly backed either by US dollars or by other crypto assets. And the second thing is that, especially during the weekend, we started to see a fair amount of concern with regards to them potentially selling their Bitcoin that were on their reserves. I think they did that to some extent. And then on that side of things, what I see is a temporary risk, but not a systemic risk across the crypto market. But I agree with you in that from here on, there's probably going to be a little bit of untangling work to do in order to differentiate the projects that are sustainable and the projects that might not be very much so. It's also very hard to distinguish what's going on within the Terra ecosystem and the broader market environment. As you mentioned in the beginning of the show, there's a whole broader macro situation that is putting pressure on risk assets more generally, and crypto within falls within that spectrum. So it's a little bit hard to untangle everything that's going on right now in terms of the returns that we see for the broader crypto market in general.
It's interesting you say that, David, because there have been conspiracy theories out there lodged about, was this a deliberate attack? Everyone from Citadel, A16Z to Janet Yellen herself. So does it even matter, though? Because the whole idea is that this was an algorithmic stablecoin that was supposed to be able to adjust and maintain the peg. So, and if there's a market event in the future where there is a exodus from the system, shouldn't it be able to withstand that?
Yeah, no, I think that's a great observation, Christine. And I do believe that the system is inherently unstable. So this type of situation was extremely likely to happen at some point in time. And actually, I think that the earlier concerns around the whole ecosystem was how it would sustain its peg in an environment where Anchor, right, which is this borrowing and lending platform on the Terra ecosystem, the Aave or compound of Terra of sorts, was offering these very high yields. So the initial concern was that, hey, what's going to happen when these yields start to go down, because they're extremely high even for DeFi standards? And we didn't even get to that point, right? Basically, what was the only thing that was needed for us to see the type of pressure that we're seeing right now was basically a sharper market movement within the crypto market and risk asset markets in general. I do agree with you that these are pretty unstable systems in the long run. But then again, I don't believe that this is true for the other type of stable coins like USDC and Tether and even DAI that have a much more resilient and robust structure.
David, let's just look towards the future here. You're talking about all the different types of stable coins. From a regulatory perspective or a lawmaker perspective, they just see these as like stable coins, or they just see these as like crypto. I mean, they're not looking at all these, fine differences. And if crypto is the Wild West of finance, algorithmic stable coins are like, I don't even know where that is. It's like on some other wilder west, right? So Question is do you think regulation is needed? Because, behind this crash, which may be sort of entertaining to watch, there's a real human cost. There's people who are losing their savings. I mean, there's people who are losing significant amounts of money. Do you think regulators should intervene to prevent something like this happening in the future? And if so, what should they do?
Yeah, no, I love it that you're touching on this, Emily. I think that regulation is coming, and regulation was already probably coming to the stablecoin market, right? Since the executive order, I think there was a very clear directive for certain regulators to start paying more attention to this market. We did see Janet Yellen's remarks in her Senate testimony, saying that she wants to see regulation around stablecoins. I think she mentioned that she wants to see that by the end of the year, and she kind of lumped everything a little bit perhaps together, also mentioning the UST debacle. I think that, and then I guess the most important thing to understand here from a regulatory perspective is to understand that, to keep in mind that these stablecoins, they are different and they have different structures and they are subject to different risks. I do believe that this is the path for sound regulation going forward. I hope this is the path that is going to be taken, but now is probably too early to tell. But I do believe that the industry should perhaps focus a little bit more on spreading that message.
So just on the regulatory
definitely
front,
have to.
Sorry, go on, Lawrence.
Oh, I was just going to ask it. Okay, Emily, you can go. That's fine.
Sorry, a quick follow-up on regulation. I know this is a tough question, but when you say regulation is coming, in terms of algorithmic stablecoins specifically, do you have any idea what that kind of regulation would look like or what the requirements might be? Or what they should be?
I think it's very hard to know at this point. It's going to be mostly speculation, but I do believe that one potential path forward would be to treat stable coin issuers, and here it's very unclear what type of stablecoin issuers we're talking here, but treating them as depository institutions, right? So putting them under the umbrella of these of banks and other financial institutions that could potentially fit into a similar sort of risk environment. So I think that this could potentially be one way forward, but I think it's pretty early to know. It looks like that the Treasury will be issuing a report on stablecoins in relatively short order. So hopefully that will shed some more light into this.
We had Coinbase's earnings come out yesterday. They were quite disappointing. The revenues have gone down over the past quarter, even though they tried to sound upbeat for the upcoming quarter. Nonetheless, everything seems to be quite down. Does this crisis in UST/Terra Luna, do you think that that's ultimately going to affect the overall crypto market in terms of the exchanges, how much money they're going to bring in, how much activity we're going to see on some of these exchanges going forward?
Yeah, this is a great question, Lawrence. I do believe that there is a short-term impact, and I think we're seeing part of that right now. However, I don't see, first, any sort of systemic risk, and second, I do believe that the fundamentals around crypto, they're strong enough so that people will eventually realize and perhaps start to pay more attention at the real fundamentals. But I definitely believe that there can be a short impact here. When we look at Coinbase's results, we did see a sharp drop in revenues. Their revenues came out at $1.2 billion. That's a 53% decrease versus the previous quarter. And perhaps even more importantly, they guided for an even weaker Q2. So they showed a little bit their April numbers and some very broad and preliminary guidance of what Q2 will look like. And it's probably going to be worse than what we saw in Q1. Having that said, I do believe that Coinbase is an exceptional company that is extremely well positioned to take advantage of the great of the crypto market in general, but that those strong long-term fundamentals right now, they're being overwhelmed by these pretty bearish earnings momentum. So that's what we're seeing in terms of price action there. I think the last time I checked, the stock was in the 70s, and that's what I think is at play at Coinbase.